Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone. Nice to see you all back on the channel. So today I want to discuss a couple of trades that we have on. I want to discuss how to potentially, what would I say, lock in some profit, what we expect to happen next, and how we can manage our trades. Okay, so there's a few little things that we're going to go through on this one. So if we look at the NASDAQ, we looked at this particular trade here. We talked about our entry here, our stop loss here. So this is the trade that we're looking at. I didn't move. I used this big bar as my entry, this big green one. So entry above that bar, stop loss below it. And now the market has moved in our favor. So if I have a look at the NASDAQ trade, look, we risked 100 quid and our take profit is 300. And at this present moment, we are 98 quid in profit. Okay, so it's running quite nicely at the moment. Now, as a general rule, this is not 1% yet. As a general, I do not move. I do not move till we're close to the 2% mark. And that's when I start generally editing my trades. Now, if we look at this one here, so we had this movement, it went up and then it come back down. It had this phase 2, then it had a double top. It had a higher phase 2, then it made a higher high. Look, so these lows are getting higher. So if we're following sort of this sort of structure, so this is the last cyclicity that we've had. If we're following that sort of same structure, we would expect a phase 2 to happen quite soon. And if I'm looking at this here, I'm looking at a technical level for a phase 2. I'd be sort of looking into the likes of this here, this here, this here. So I'd be looking into this area here again for a phase 2 to go up, hit, or the phase 1 to go up and hit, and then a phase 2 to start. Now, can't guarantee that. Can't guarantee that, because if we look at this level here, it broke through that level there, didn't it? It broke through that level, so that level wasn't respected, and it came back and then it retested. So it was at that particular point. It wasn't from underneath. So it depends on what buyer strength is going on at this particular moment, but you'd expect some sort of phase 2. Now, the question is are we going to get a phase 2 like we've had here? Are we going to get a phase 2 like this? Or are we going to get a phase 2 like these ones? Are the buyers now in this market? So because we have that low and now we have a higher low. So the question is this now going to kick on to the upside? So we are expecting a phase 2. Now, there's a couple of things you can do here. Is when it gets to this area, you can close your trade. Okay, some people will do that. If it gets to that point, you close your trade. Now, it may not get to that point. This may be the high. This may be the high. You close your trade. And if the phase 2 comes down, then you get back in there. So what we're looking for is some sort of support and resistance. And if we look across there, we have a little bit of support and resistance at that point. So bounce, bounce, and here. I know that level is not 100% straight, but we'd be looking for the comeback, hit there, and then bounce up again. Now, we're all talking about upside, but this may come the whole way down to here. This may be the phase 1 to the downside, phase 2, and then phase 1 again to the downside. So we have to work out Which of these two are we more confident about? And if you're still more confident of downside, you start moving your stop loss underneath these bars. So which means then you have now banked in profit. So you're putting your stop loss underneath yesterday's bar, and then this is today's bar, so you leave that alone. So you're giving it a bar of movement. So whatever bar happened yesterday, that's the movement you're leaving in the market. So there's a whole heap of different ways. If you're still expecting the market to go, but you want to take your risk off the table, you're wanting to take the risk off the table, but you're still expecting the market to go, what you do is your stop loss. So here, you move your stop loss up to break even. So you move your stop loss from this point here up to break even. And my thing is you put it slightly inside break even. You put it slightly inside break even, which means then that any rolling fees, any rollover fees that you've incurred. So if I look at this one here, I have a quick look. So overnight fees is £2.22 for the overnight fees. So any overnight fees that I've incurred here, I'd be looking to keep that. I'd be looking to get rid of that. So I wonder, can we do that again? So we'll go to portfolio here. It used to be in here where we could add fees. I know they change a lot of stuff. Fees apply. Let's see if we can see those fees. So the NASDAQ has cost me £2.21. So that means then when I'm placing this trade or when I'm moving my stop loss, I make sure that I'm putting in £2. What is that? £2.21. I would probably put it £5 in profit. Where are we gone? Where's the NASDAQ there? So I've put it about £5 in profit. And that means then there's no chance of me losing money on that particular trade. That makes sense. So that's what I would do on that particular trade. So I'd make sure that I'm in a little bit of profit. I would make sure that so on and so forth. So I'd make sure that I'm putting my stop loss £5 above that, which means I cannot lose. That's one of the things that we can do at this particular point. Now, again, the market hasn't gone far enough away for us yet to be moving our stop loss aggressively, in my opinion. I really like to keep it. I wanted to go to 2-1 before I start moving it. But again, we have had so many false starts here. People may be a little bit nervous, and I understand that. Absolutely understand that completely. People get nervous, and what they do then is they move things. So I can completely understand that. So you have to make sure you understand what's going on in the market and you make a decision, and then you live and die by your decisions. This will either be a profitable trade or it won't be. A profitable trade or it won't be. This one here, look, it didn't go up. So we were looking for a 3-1, didn't go up to a 3-1, came down, stopped us out, and then went. But at this particular time, I actually got about 0.5% out of this trade before I jumped out of it. So we have to make sure when we get into these trades that we are looking at them, and if we're confident, then we stay with it. If we're not, then we manage our trades. Now, if we just have a quick look at the S&P. So the S&P looks more bullish than the NASDAQ. So the NASDAQ, we've had this, but if you look at the S&P, it's just a little more bullish. Now, it is coming into this level, as you can see. So it is 1, 2, 3, 4, 5. So we're hitting this level again. So there is a pretty decent level on the NASDAQ coming in here. And then we have the Dow. So the Dow has broken that level already, as we can see. So it's broken that level. So the Dow, we would like to see it break and retest. So we like to see the Dow break and retest there. If we go down to the Aussie 200. That's another trade that we're in. And if we have a look at, so our entry was on this, off this level here, bounce, double top, came back with a nice price action bar, and it gave us all the indication that this was going to go up. And that's what happened. We've had 1, 2, 3 really bullish days. Really bullish days. Today is a little bit uncertain. It's still an inside bar. I'd like to see that taken out that high, but we will see what happens today. So I'd like to see that a little more bullish. But if we look at this, at the moment, we're 173 quid up. So if we click on the trade, look, we risked 100 quid, and we're now, our take profit is 300. Now, there's loads of little things that we can do on this particular trade. Now, I know at one stage we used to be able to par close the trade, so let me see if I can still par close the trade. Now, what I can do is, if we click on close, doesn't close our trade. I click on par close, I can close half this trade. So look at this, £453.92. I can click on this and I can part close that trade. Now, the idea of par closing this trade, it means we bank in half of this. So it's about 80, 86 or 7 quid. Okay, so that's what we're closing. So we close that, I click on close, and I par close that trade, and then that means then we've banked in 87 quid. Now, what I would do then is I would move my stop loss inside break even. So it says £3.80 here. So let me see, is that correct? So if I go down here to, up here to the Aus200, £3.80. So that's what it's after costing me in fees. So what I will do then is I'd move my stop loss up to say plus 10 quid. And then I've banked some money. I've moved my stop loss inside break even, and I physically cannot lose. Now, what most people will say to me then, but Henry, your upside is then halved. Absolutely, or your upside is halved. It's anything from here up is going to be half that. So you have to work out, do you think that this is going to hit this take profit? Yes or no? And if you think it's going to hit that take profit, then you leave your trade alone. What you could do is be a little more aggressive on this. What we could do is we could move our stop loss underneath that bar, and then this bar, then it goes underneath this bar. So see this one here? So that's what we could move our stop loss to. What is that? 6950. We will look at that on actually the eToro charts because they're all slightly different charts. So they're all slightly different charts. So there's the stop loss, there's the entry. And if we were looking to change that, 6926. 6926. So if I move my stop loss to 6926, that means I'll be banking £129. That means there's 50 quid. 50 quid still running there. Or 42 quid still running there. That means then that worst case scenario, I walk away with £129. But they're all little things that you have to work with. Now, the problem with doing that, so the negative of doing that is if we get a phase 2. So if we get a phase 2, you're out of the market. And if it hits that phase 2 and goes up, you're out of this market. Now, again, there's nothing stopping you jumping in here if it gives us a nice entry bar. So look at here, phase 1 here. Perfect. We jump out of the market. We're looking for this phase 2. And then look what happens here. The entry bars here are horrible. So look, there's the top of the entry, and there's your stop loss. That is huge. I wouldn't think anyone in the right mind would take that trade. It's massive. Okay. And then look, we've 1, 2, 3, 4, 5. You may have been triggered in there. 6 may have been triggered there if you didn't. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that trade is sitting there 12 days before it gets triggered in. And it triggers in, and then it drops down straight away. And then there's another day before we actually get into a little bit of profit. So you have to work out, are you confident that this market is going to continue going? If you're confident it's going to continue going, you leave it alone. What you may do is move your stop loss inside break even. You may do that. But the idea is that you have to make a decision on what you want to see happening. That if this phase 2 happens, are you happy to be out at £129 profit? And if you are, brilliant. Comes back down, and if it gives you a nice entry, then you take it. You go again. And then if you take the second trade, you're playing with money that you've taken out of the market. So you have to make sure when you're placing your trades that you manage them accordingly. And this is super, super important when we're looking to trade, because picking a good trade is only 50% of the battle. Managing this trade is the other 50% of the battle. That is one of the key points when we're trading, is that we make sure that we're managing our trades correctly. We're making sure that we're following our structure, making sure we're following our plans. Now, I understand we are in a very, what do I say, volatile moment. The market has been dropping like a stone for the last 6 months. It seems to have hit the bottom. We had a little bounce, and then it goes again. But this could very well be a dead cat bounce, and then it continues going down. It very well be. But I highly doubt it. But it could be a dead cat bounce, and then the market continues dropping. That could be. But I would sort of expect the market to move like this, sort of sideways, for the next sort of 3 or 4 months. And then hopefully, with inflation being curbed, with potentially the war in Ukraine sort of settling down a little bit and potentially finishing. I know that's not anything soon, but if all those things come into play, then we could actually start seeing this market starting to pick up to the upside. So there's 2 trades that we took on Sunday's webinar. Really important, that we actually manage our trades correctly. And this one, there's less managing on it for me because it hasn't hit the 2-to-1. This one, the Aus200. Now it's almost at the 2-to-1, so we could, in theory, then actually manage it and edit it and par close, move our stop loss, stuff like that there. So there are options for us to do that now, whereas the other one, not so much. And that's how I would sort of manage my trades. At the minute, I expect this to continue going. I may be wrong, but I will sit through this. I expect this one to hit the 3-to-1, so I will hold fire. And if it breaks this level, then I may close the manual trade. But for me, I'm happy to sit through this phase 2 here. And if it comes back to here, I may actually even take a second position on this long. So for me, I'm happy to have that pullback and then look for it. But if it breaks this floor, I will then look to be out of this trade, take a small bit of profit. I understand that I'm giving a little bit back to the market, but sometimes fortune favors the bold. And for me, the way I trade, I'm looking always to get at least a 3-to-1 on my trades, unless the analysis has changed completely. And then at this particular point, if it breaks this floor, my analysis would have changed completely because I'm expected to come back to here and then go again. Whereas with the NASDAQ, we're into these key levels here. So we're coming into them. So I have to wait and see what's going to happen. Ideal scenario, just continues motoring. Ideal scenario, hit that, and I will be out of this trade before it hits this high. Have to be out of it before it hits this high. Or what we could do is, if it's motoring well, what we could do is par close the trade at 3-1, and then move your stop loss inside, probably 50 quid in profit. So then worst case scenario, you've banked half it, which would be 150. You've moved your stop loss up 50 quid, which means worst case scenario, you're making 200 quid on this particular trade. And then you let the rest of it run. And if it continues running, who knows where it goes? Because if we got in here and we let it run to a 3-1, and then we let it run continue, look where it went to. It was huge upside. But remember, we are potentially at the very beginning of the next upward momentum. If we can survive this, if we can sit through this, if we can get away with this, there could be huge upside for us if we can hold on to this trade, if we can keep it, if we can keep our nerve with the likes of NASDAQ and even with the Aus200. Because generally, once these start to trend, they generally start trending for 6 months to 2 to 3 years. So just be aware of that. If we are at the beginning of it, if that went the whole way up to here, that previous high, that'd be a 10-1. We'd be quite happy with that, wouldn't we? I understand I'm talking about future and what we expect to happen next, but just be aware that we could be at the very beginning. And again, like I said, playing devil's advocate, we might be at the beginning of the next movement to the downside as well. So you have to sort of protect yourself as well. But if we are, there's huge upside here for us. Okay, everyone, anyone who is not on my webinars, there's a link in the YouTube channel here. Click on that, jump on the webinars. There's a free month for you guys. If anyone wants to jump in on it, jump in it for a month, try it. I do webinars every Sunday and every Wednesday, and these are kind of stuff. So it's foreign exchange and indices of a Monday, and it's stocks and indices and precious metals of a Wednesday. So Sunday is FX and indices, whereas on Wednesday it is indices, precious metals, and stocks. Okay. Pleasure, everyone. Thank you very much. Hope you all have a lovely evening, and I will speak to you on Wednesday.